What's up, traders? Julian here from jlewistrading.com, and today we're doing a market recap on the S&P 500 for July 16th, 2018. Over here on my daily chart, we're looking at, generally speaking, the same levels. Right through here was that big target level that we were looking at for the S&P to break out of. You can see that right through this general area, it is having a bit of a challenge. It did break out, but it's not really doing much since breaking out other than moving sideways for the last two sessions. If you actually look over here on the daily chart, this is a 5-minute chart, pardon me, for the S&P 500. You can actually see that we have this range high and this range low, and it's just essentially moved sideways today. There's nothing trending about today's market in the S&P 500. So you can see right through here, again, it's just sort of a bit of a micro flag. And essentially what we'd be looking for on the S&P 500 is now a breakout of this little area of 2803. You can see that we've got some structured resistance through this general area. We had a high, pivot high through here that has now been checked twice, creating that structured resistance. And what we'd be looking for is that 2803 area to go. And like I've mentioned in previous videos, the first checkpoint that we'd look for any type of resistance, which we'd want to punch through if we're going to continue long, is that 2839 level. And then from there, we'd keep moving to the all-time high of this general level up here at 2871. Again, very, very approximate, but these are the levels that we'd be looking at on the S&P 500 long. There isn't a ton of value as to looking to the short side of things because right now, there is a better chance that the markets are going to go long. Again, this is all technical analysis. I'm not taking in any sort of news or macro events that could potentially assist in the S&P swinging to the downside. But as it stands right now, this is what I'm looking at on the S&P 500. I'm looking at this little trigger area of about 2803, and should that be taken out, we could rally right into that 2839 area. Now, if you were to look at this essential area right through here with all the volatility of price action sort of ebbing and flowing, if you were to look at it conceptually, what you've got essentially is sort of a inverse head and shoulders pattern, but you've also got a short-term head and shoulders pattern building itself out through here. But again, on a larger time frame, you've got sort of this complex head and shoulders that is building out. So again, if that 2803, which is now short-term structured resistance, was to effectively act as a neckline and it broke out to the upside, you know, it's not difficult for us to speculate that price action could potentially rally very, very hard, and even in fact taking out this approximate level of 2879. So something to watch for. We'll be reviewing the S&P about 3 times a week now. I'm going to do it Monday, Wednesdays, and Fridays. So you might want to turn that alert on so you actually get this sent right to you. And don't forget to like and subscribe to the channel. And the Ask a Trader webinar, we do have a link below. So if you want to attend and get some further and more in-depth insight into the S&P 500 and some of the other stocks that we're trading, by all means, click the link below and sign up for Ask a Trader. It is 100% free, so come and join us. And that's on Tuesdays and Thursdays at 6 o'clock Pacific Standard Time. My name is Julian. If you have any questions about this review, by all means, click the email link below, info@jlewistrading.com, and we'll see you in the next market review.